Kailasan silanganan, alam ng puso, sa dibdib mo'y buhay. Lupang hinirang, duyan ka ng magiting, sa mandulupi, di ka pasisiil. Sa dagat at bundok, sa simoy at sa langit mong tughaw, may dalagang tula at awit sa paglayang inamahal. Ang isap ng watawat mo'y tagumpay na nagniningning, ang bituin at araw niya kailan pa may di magniningning. Lupa ng araw na luwalhati ng mundo, ay langit sa piling ko. Aming ligaya na pag may mga atin na pumatay ng dahil sa'yo.
Love, I ordered cake.
Wow, thanks na. Bilis ah. Teka lang kuya.
Love, bayad na.
Just debit the video.
Online shopping?
Just debit the video.
Love being free? Get where you need to go. Get a video auto-loan now. Love your new home? New life, new beginnings. Get a BDO home loan now.
Good day. Thank you for joining us on the Manila Times online business forum titled Grow Wealth with the Great Investment Reset, live streamed on the Times Facebook page, as well as the YouTube and Daily Motion channels, and broadcast on the Manila Times TV. I'm Dafort Villaseran, and co-hosting with me today is the Manila Times columnist, Ben Kritz. Hi, Ben.
Hi, good morning, Fort.
Now, some of you might know that Ben was born in the USA, and he grew up in and around Lancaster, Pennsylvania. He earned his first job as a newspaper correspondent while still in high school. But then he had to interrupt his writing career for more than 20 years to work in the automotive industry. But in 2004, he left the rat race and he moved to the warmer environments of the Philippines, where he transformed his second career as a popular blogger and channeled it into being a business columnist for the country's longest trusted English daily newspaper, the Manila Times. So Ben, what do you think of today's topic, grow wealth in the great investment reset?
I think this is very timely. What we've been through over the past 18 months is got everybody thinking about their own finances, and this could, perhaps give people some ideas how to be more productive with their money.
Yes, it's very interesting. And what do you think of our interesting lineup of keynote speakers to talk about our topic?
Well, I'm interested to hear what they have to say. And, as I mentioned before we got started, I'm really as new to what they have to say as everybody else. So I've been looking forward to learning a few things myself.
Yes, indeed. We're fortunate to have as panelists BPI President and CEO T.G. Limcauco, BDO Capital Investment Corporation President Ed Francisco, Salcedo Auctions co-founder, chief specialist, and chairman Richie Lerma, and Lobien Realty CEO Sheila Lobien, BDO Securities Corporation President Jose Eduardo Jed Quimpo II. But before we take a deep dive into Grow Wealth with the Great Investment Reset, allow us a moment to thank our sponsors for making this online forum possible. Our co-presenters are, of course, BDO and BPI, and our sponsor is Infinivan. Our special partners for our delicious lunch later are Ascot BGC Manila, Bay City Cafe, Citadines Bay City Manila, and Scott's. Now, our organization partners are the British Chamber of Commerce Philippines, the French Chamber of Commerce, the Davao Chamber of Commerce, the Financial Executives Institute of the Philippines, and the Italian Chamber of Commerce of the Philippines. We also have the Management Association of the Philippines as a partner, and of course, our media partner is the Manila Times TV. Now, topmost in the minds of investors and people with cash on hand is what constitutes correct portfolio strategy during these volatile times. It's certainly difficult, like Ben mentioned, to make the right financial decisions when social media and the economic environment, they're all screaming panic. But once the money wise have gotten a grip on their emotions, and this is where you have to be able to control your impulses, those with market discipline will realize that now is the time when the greatest wealth exchange is happening in many parts of the world, even in the Philippines. And we can capitalize upon these if we have smarts and we have a reset in our mindset. Hence, one of the tenets of this reset is that markets have consistently given returns to those with discipline, meaning a disciplined investor sees beyond the headlines. You're not as rattled by current events, and you look at the long game of the market potential. So this is because whether in times of all-time high returns or even in times of correction and decline, the investment market is extremely resilient and recovers. The question is, what investments are hot now and what are not? So to help us figure our finances out, our first speaker was appointed the President and Chief Executive Officer of the Bank of the Philippine Islands on April 22, 2021. He was also appointed Non-Executive Director last February 2019 and is a member of the Executive Committee in BPI. Prior to BPI, more than that, he was a Chief Finance Officer, Chief Risk Officer, and Chief Sustainability Officer of Ayala Corporation. He was the Chairman of AC Energy International and the President and CEO of AC Ventures Holding Corporation. Now, he was the Director of Globe Telecom and Integrated Microelectronics, among other industrial, infrastructure, energy, and healthcare companies of the Ayala Group. He was also a director of the company that operates Zalora Philippines and remains currently a director of Mint, the operator of GCash. So he has a lot on his plate. And ladies and gentlemen, it is my privilege to introduce T.G. Limcauco. Welcome, T.G.
Now, thanks so much, Dafort, and good morning to Ben and all the other panelists out there. I've actually been asked to talk a little about financial inclusivity and sustainability. And I know that today's topic is really about the great investment reset. And therefore, I completely agree with you. These times are very strange times.
Yes.
But I think for the bold, the brave, and the wise, there are great opportunities out there if you think through it. But I wanted to talk a little about inclusivity and sustainability because I think it's important for all of us to realize that there is no wealth when you don't have the whole community in a comfortable situation. So it's important that as the fortunate amongst us, the educated amongst us, try to grow our wealth, we pay very close attention to the greater society at hand, to the environment and to our communities, because our wealth can only be created, our investments can only flourish if the communities and the environment that we live in flourish as well. So with that, allow me to spend some time talking about that. And maybe at the end, during the question and answer, we can talk really about some of the ideas that people have, because you have a great panel here with Richie and Ed and Jed and everyone else. They'll cover the whole gamut of investment ideas. But maybe let's take a step back and talk about where we are in the situation and how we really must pay attention to sustainable finance and inclusivity, because that's what will create wealth for all of us. When I assumed this role of president back in April, just 6 months ago, we were in one of the toughest spots, and we continue to remain in one of the toughest situations, just not for our bank, but really for the economy as a whole. Since the pandemic started, BPI has been doing so much to help our clients, to make sure that our employees are safe, to make sure our clients manage their finances well, to help them adapt to the changes, and especially keep themselves safe by providing means for them to go digital, and so much more beyond that. Actually, next slide, please. Sustainability is actually very close to my heart. At BPI, we really strive to build a sustainable future for the Philippines and for the Filipinos. And it really isn't just about saving the environment. Operationally, this means that we at BPI will work to reduce our waste and reduce our power consumption. We need to reach out to underserved and underprivileged communities more aggressively than we've ever done so, and to really integrate ESG, environmental, social, and governance principles into our lending practices. For example, at BPI, we have made the commitment to reduce our coal financing, the portion of coal in our portfolio, by half by 2026, and to zero it out completely by 2032. This is a commitment that we've made to help create a cleaner and more livable environment for our children and the generations to come. At BPI, we've defined this unique ESG plus E formula, where the last E, the plus E, stands for economic growth. Because we believe that we cannot be truly sustainable if we don't consider economic growth, both for our customers and for our country. And that's why we have this, that's why we integrate ESG plus E criteria into all the KRAs of our employees. Next slide, please. For our business clients, we aim to help accelerate their ESG awareness. And together, we hope to achieve growth and profitability for all of us through the adoption of these principles. For the plus E, for the economic growth, it is important for us to look at this quite closely. Businesses should generate value, and they should continue to be profitable for the stakeholders. If we don't have economic growth, then we are not, I guess you could say, we're not genuinely sustainable. As a bank, we need to emphasize this because our clients come to us for their financial growth and their financial well-being. Next slide. Let me take an example, right? We help the micro enterprises in our country flourish through our microfinance arm called Bangko. This segment is really part of our sustainability effort, as it allows micro entrepreneurs to have access to affordable loan products and other opportunities that help them grow their businesses, many of which are actually very informal, and then to consequently contribute to our country's progress. As of August this year, we have served a total of close to 200,000 customers and released close to 24 billion pesos in loans across 307 what we call micro branches nationwide. The goal is to provide access to more working capital to these micro entrepreneurs and to digitize the processes that they go through so that it makes it easier for them. We actually have an app for them, and our SMEs, our self-employed micro entrepreneurs, take advantage of our savings product called Pondo Ko and our loan products called Negosyo Ko to grow their businesses. We recently tapped the IFC to strengthen and digitize our operations here. The self-employed micro-entrepreneurs will be able to gain easier access to a range of products and services with the added benefit of new digitized processes that we hope to introduce in the future. For example, in their app, they can pay their government permits, they can pay their loans, they can buy loans. Our goal really for these micro-entrepreneurs is to provide them more working capital and to digitize their processes so that the day-to-day mundane tasks are easier so they can spend more time growing their business. As I mentioned, the Banco app, which helps us even reach more people in what we call the economic D segment. Our clients can conduct their financial transactions using their mobile device, whether it's a smartphone or even just a feature phone. We will find a way to increase our share of the agribusiness in Banco's portfolio. Then, next slide, please. Let me talk about our SME clients. Our business banking segment has also been doing its best to assist the small and medium enterprises. As of June this year, we have served more than 115,000 business banking clients and released over close to 34 billion pesos in loans. We conduct webinars to help these SMEs rebound, and about 1,600 of our clients have attended our BizTalk online webinars. The topics in our webinars revolve around our economic outlook, cash flow management, entrepreneurship, taking advantage of a digital economy, how to digitize, SOCMED lending, SOCMED selling. We also offer a clean term loan program for them, which does not require any collateral from our borrowers. All it needs is that we just need to get a really good relationship with you and understand your business. It has clearly very minimal documentary requirements, and we promise a fast turnaround time versus the standard loans. We're also planning, and we also hope to launch an app for SMEs by the end of this year, which helps them not only manage their banking transactions, but also manage the day-to-day operational aspects of an SME business. Next slide, please. Then, obviously, we also have our foundation. Through our social development arm, the BPI Foundation really continues to roll out our flagship financial literacy programs called FinEd Unboxed. This is a customized financial education program that seeks to improve the financial capability of our everyday heroes, such as the teachers at DepEd and even the non-teaching personnel, the uniformed personnel of the military, our migrant domestic workers, and their families. We even released a game called Breakthrough, which teaches financial literacy. We also launched an Adopt a Beneficiary program, a high-impact mentoring program on financial wellness. We did this earlier this year. It really is our way of giving back to our uniformed and non-uniformed personnel from the PNP, the DepEd employees, and the adult family members of our overseas Filipino workers. And we do this, believe it or not, through one-on-one mentoring sessions with BPI volunteers. On the sustainability front, I guess more on the environmental front, we also embarked on a 3-year sustainable cities program to create sustainable cities, one city at a time. We started a pilot program with the city of Manila. We also have a Balik Kalikasan program that focuses, believe it or not, on reforestation efforts to compensate for our carbon footprint emission as a group, and at the same time provide a sustainable livelihood for the reforestation site communities. We have already started to reforest 170 hectares of land in Nueva Ecija through a program we call Lakbay Luntian, which was part of our 170th anniversary celebration, which we did last August. And then finally, we launched a partnership with the Agria Foundation to further enhance our farm-to-table program, which really aims to empower farmers to achieve their best potential in agriculture. So all this we do through the BPI Foundation. So next slide, please. As all of us really envision a better Philippines, we really don't want anyone to be left behind. We really are in all of this together, and we will help every Filipino get back on his feet. And through this, we can contribute to the development of our country, achieve economic sustainability, and take advantage of this great investment reset that's about to come. Now, I think for many of investors out there, you need to be smart. You need to be very focused on what the risk tolerance you might have, because I think personally, we are going to go through a very volatile period of investments. But certainly, because of liquidity around the world, there is great potential for good returns if you're in the right area. And I'll leave it to my colleagues to talk about what areas they think. And I'm sure Dafort and Ben will have lots of questions, and we'll have a great interaction at the Q&A where we can share our opinions, ranging from real estate to bonds to stocks and even cryptocurrency. But it's important to note that if we want our personal wealth to grow, we need the personal wealth of our communities to grow as well. So thanks so much, Dafort and Ben, and to the Manila Times.
Okay, well, thank you, TG, for that. I think you mentioned some important points about looking after the health of the community, and we'll look forward to talking with you later in our Q&A session after our other speakers. Our next speaker heads the investment banking group of BDO Unibank Incorporated and holds several positions in BDO. Excuse me. He is the president of BDO Capital Investment Corporation and chairman of Averon Holdings Corporation. He sits on several boards such as the Development Center for Finance, the CIBI Foundation, the Shareholders Association of the Philippines, International School of Manila, UP College of Business Alumni Association, the Makati Sports Club, and the Valverde Country Club. And he is also a member of the Makati Business Club and the Polo Triathlon team. He has also worked with other financial institutions in New York and Hong Kong, such as Bank of America and Barclays Bank. He holds an MBA from the Wharton School of the University of Pennsylvania and a bachelor's degree in business administration from the University of Philippines. Would you please welcome BDO's Mr. Eduardo Francisco. Ed, good morning.
Good morning, Ben. Thank you for the introduction. Good morning, Dafort. Thank you to Manila Times. Anyway, if you just go to the next slide, we already anyway coordinated well, because I guess the other thing that I should have put in my resume, and the most important thing is TG and I are bilas, because we are fortunately married to a sister. So I consider him a brother, but that's why even in this slide I said it's perfect, because TG spoke about financial inclusion, the bold, brave, and the wise, and inclusivity. My talk, my 14 minutes left is really not to talk just not even video, but just talk about the country itself. What are the products available? Because what I hope to do, anyways, I will also be the segue for Richie talking about investments in art, for Sheila investments in real estate, and Jed talking about stocks and other investments. So that's the objective. We are all working as a team. We want to make sure that the rest of the Filipinos get to invest wisely. Next slide, please. Cello. This is a very important wealth pyramid, and it's sad, but it's true. And I hope maybe Ben, Dafort, you can just share this with the audience, because I have a lot of detail in my slides, but I do not intend to go go into it in detail, because we won't have enough time. But basically, the left pyramid shows the number of people, but as you will see, 58 million is, or more than half, are really the poor in the local class. But when you look at it on the right side, they're also the smallest part of the pyramid, versus we see various estimates, anything between 1 to 3% of the 100 million Filipinos are the rich, and they occupy the largest part of the wealth pyramid. That's the irony, but that's why also I agree with TG and the rest. We all of us, I guess, in the financial community and the management community, believe that we should find a way to share the wealth, because the wealthy already have access to all the financial products. So what we are all doing, whether BDO, BPI, Metrobank, even the foreign banks, digital banks, we're trying to allow access now to the other financial products that were not available to them. Next slide. Here, TG mentioned it already earlier. Again, just for the viewers, risk return is important. So just remember, the higher the risk, the higher the return. Now, the key is that's the most important paradigm or action, but you have to remember now, identify which are the higher growth and what is lower risk, what is also lower risk. The next slide, please, will show that. This is a good código. The middle slide of treasury bonds all the way to futures and junk bonds is the traditional finance 101, because in fact TG and I were together in Pennsylvania. So this is what you see in American textbooks. What I just added on the left slide, at least just so that it's relevant to the Philippine context, when you look at treasury bills and bonds, because of Treasurer Lea De Leon, you have RTBs, retail treasury bonds, you have premium bonds, you have RDBs. There's a current retail dollar bond out in the market, so it's a good for OFWs. You go up the ladder, you have bank deposits. Of course, sovereign should be lowest risk, but the bank deposits or bank instruments of the banks are very secure. And of course, there's up to 500,000. It's protected. And then you have corporate bonds. And then also we had the discussion earlier about REITs or REITs and preferred shares. Those are the new instruments available even to as far as low as 1,000 or 5,000 pesos. And then you go all the way to the cryptos, which we can talk about later on. In fact, I have some slides just to give you an idea about how regulators are looking at them. So the gist of this slide is you have to know which the riskier assets, because you should expect also a higher return. And also, as mentioned earlier, we have to know what your risk mentality is. And I will show some slides later on why it should change over time, and also on social, depending on your social status already or stage in life. Next slide. Here, just to give you some examples. Admittedly, this slide is not good for BDO and DPI, because basically this is just showing that even the C and D class can get access to higher rates from the digital banks. That's what they're coming about. And then of course, those of us with large branch networks are paying a little lower. So I guess you just have this alternative investments. Okay, next slide. And then of course the premium bonds of the government, where they even have a raffle of a condo if you win. So that's done very well. And then the government will continue to do that thanks to Treasurer Lea De Leon. Next slide. And then also, of course, just to show you that aside from you going to the branches of the banks, TG and I have worked many years on ensuring that we have access to our branches, but you have PayMaya, you have GCash as alternatives to accessing your financial instruments. Next slide. And then even US dollar preferred shares, there are new instruments in the PSE. So it's not just plain common shares. When Del Monte issued this a few years back, it was 6.6. Of course, it's much lower now. But just to give you an idea that you have 6.6 or 4% probably is the yield now, and then versus 4.5% for a retail denominated bond of the government. So you have alternatives aside from putting it in time deposits with BDO, BPIs, and the rest of the world. Next slide. And then also with working with Mon Monzon and the rest of the PSE board, they've made it easier for you to invest. You can do it online. You can also do online investing in the retail treasury bonds. Again, the objective, again, as mentioned, is we want in financial inclusivity, not exclusivity. So again, because of the rising middle class, and of course, we've had problems these last years because of COVID, but hopefully, as the economy revives, you'll have savings again. These are just various instruments you can invest in. Next slide. And then I guess one of the riskier assets, but volatility also means that there's money to be made, are cryptos. Because on one side, I guess the Philippines at one point they were saying we don't really understand it, but now there's already plans for some exchanges. But also recently, China now is banning it. So there are pros and cons. But then I'm also an advocate that if you understand it, there's money to be made, and especially the young kids. I think there was a statistic that came out that while there are around 1.5, 1.6 million Filipinos who have PSE trading accounts, surprisingly, there are more than 3 million Filipinos who have crypto accounts. So it shows you, even if there's no exchange here in the Philippines, it's actually permeated across all ages and sectors in the country. So in a way, I guess you just have to embrace it and understand it and help, rather than say that it's not a viable instrument class, because otherwise a lot of people will get burned and they're into it already anyway. Next slide. And then here, just some generic slides, but just to share with you. Again, we will share with you the slides, but cash is king. But just to show you, over time, equities have generally done much better than fixed income. So it depends on your risk return profile. And basically what we are all advocating, and this is not a sell of any of our banks, it's just to basically say that, you understand the risk. And then I guess the next slide will just give you some examples. You just have to diversify. Here's just an example. As you're younger, 18 to 25 is the second range. You're supposed to be young. You're supposed to be super aggressive, not much to lose. Then you might have a higher percentage in equities, for example. As you go up the last column on the right, 56 and up, it's even going to be 65 maybe now, because we're all still working past 60. But as you're already, I guess, retired, you have less on the growth stocks, growth investments, but more already in the safe returns, because you want stable dividends. So this is just to give you an example, and maybe this slide also is a segue. If you look down, I already have I have two rows. One is on art, jewelry, cars, and then above that is real estate, because Sheila and Richie will explain to you how you can also enjoy and yet make money in those different investment classes. Next slide. And then just a little about this. Of course, we just had their fourth or fifth REIT recently, which is the Mega World REIT. They have generally very good yields, good issuers. So they're yielding today around 5.5 to 6%. Ayala was the first, and then you have Double Dragon, FLI, Robinsons. There will be more to come. It's a good investment that you might want to get into. And then also there have been preferreds. Jollibee just finished theirs last week. Also very, very well subscribed. San Miguel, Del Monte, Petron, others are doing that. So there are callable and non-callable preferreds. We can discuss that in more detail, but basically just to tell you that at least even for as low as 1,000, 5,000 pesos, you can invest in these things already. Next slide. And then this slide is not, I do not expect you to memorize this because it's very complicated. But this slide is a good código for the audience, because you have to also look at the tax implication. Depends on whether you're an individual or a corporate, because the effective yield is more important than the gross yield. So the thing I just wanted to let you know is that, for example, if you're given a 4% yield for a bank deposit or a bank bond, but if you're an individual, effectively, it's not 4%. It's 4% less 20%. So it's 3.2. Versus if you get 4% on a preferred share and you're an individual, because an individual only gets 10% tax, your effective is 3.6 because it's 10%. Again, also, if you have a holding corporation and you're investing, for example, in a preferred, your 4% is zero tax. You end up with 4%. So what I just wanted to do is just give you this chart, because depending also on what kind of instrument, depending if you're an individual, if you're tax-free, if you're a foundation, it changes your investment also returns. So that's all I wanted to say here. The next slide, basically it's just a summary, because I'm very conscious of time, but basically the super rich or the rich already have access to global products. We also cater to that. But together, the whole financial industry, the BAP and the rest of the financial firms here, even the digital firms, even the exchanges, we want to make sure more products are available to all of you. The higher the risk, the higher the return. We want you to understand the risks and the products, because you want to make sure also we're selling you something that's appropriate for you. There's no one appropriate portfolio. There's no perfect portfolio. It has to be tailored to your need and your life stage. And we want you to diversify. Really, at the end of this, we want the Filipinos to enjoy. We want you to have a better life, as mentioned by TG. And hopefully, a better life will also mean that you will purchase something from Salcedo Auction, or you will buy something from Sheila, or you will work with Jed and open an account. Thank you very much. I think the next slide is just my cell phone. So feel free to email me or contact me if you need any information.
Thank you, Ed, for that enlightening.
Thank you.
Thank you for that lively intro and very enlightening ideas on investment options. Please join us later for a panel discussion after our three other speakers are done with their talks. So our third speaker holds three hats for the Philippines' premier auction house, Salcedo Auctions, as Ed mentioned. He's the co-founder, chief specialist, and chairman. And he also brings together a wealth of knowledge and experience in art history, curatorship, and the art market. He was the director and chief curator of the country's first modern art museum, the Ateneo Art Gallery. And he is also the founder of the nation's most important contemporary art prize, the Ateneo Art Award. Now, he is a two-time recipient of the National Book Award for Art. It's my pleasure to introduce Ramon Richie Lerma. Welcome, Richie.
Thank you very much, Dafort, and thank you. I just like to take this opportunity to acknowledge our distinguished co-panelists, of course, and the guests that are joining us this morning. And of course, extend my warm appreciation to the Executive and Editorial Board of the Manila Times for inviting me to be a part of this forum, Grow Wealth with the Great Investment Reset. Now, I will be sharing my screen. Just need to... Oops.
So, Richie, you'll be sharing with us insights on what investments, what types of art we should be putting our money into.
That is correct. Let me just, and I hope that... Are you able to see it?
Yes.
Are you able to see the slides?
Yes, sir.
Okay.
Then just make it presentation style.
Yes, sorry. There you go. Oops. Present. Oops. There you go. All right. Thank you. The heartening response to this lecture shown by your presence here this afternoon shows the keen interest that you all have in learning more about the art market. I hope to help you in somehow lifting the cloak of mystery involving this fascinating world where objects made out of paint, canvas, wood, paper, sometimes even scraps of metal, are transformed into objects of beauty that command such astonishing prices, with the promise of returns in many cases rivaling even stock, money market, or property placements. Now, we've all seen different pie charts in this forum, but this is my pie chart. And this is Mandala by Jose Hoya. In this day and age when most of us are struggling to find where to put our hard-earned cash, most sage advice on maintaining balanced investment portfolio strategies will tell you that in addition to financial instruments such as mutual funds, bonds, or other complex instruments, the high net worth individual understands the wisdom of allocating a portion of their money to acquiring physical assets. Among these, of course, is art. Why invest in tangible physical assets? It's simply because we need to be able to balance out volatility. As we all know, it's important to own assets that are also uncorrelated to the market. Art, as you will see, is not susceptible to the swings of the PSE or the S&P 500. In fact, it has shown time and again to simply buck the market or move in the completely opposite direction, particularly in times of uncertainty, such as the one we find ourselves here in the midst of the pandemic. The payoff is normally seen, of course, in the long term, but more and more, of course, we are seeing short-term gains as data comes through in reliable channels, such as, I hope that everybody will be able to see this at the end of this presentation, such as the data that's presented by Salcedo auctions. In fact, this greatly inspires us in terms of where wealth can be grown. The future is here. Work that was just auctioned off at Salcedo 2 weeks ago by national artist J. Elizalde Navarro. This will, of course, lead you to want to make sense of this phenomenon and examine the price dynamics of art, seeing how collectible goods such as these achieve and continue to gain importance. More succinctly, what I'd like you to think of is how cultural value translates to certainty, such as the one we find ourselves today. With history, in fact, being on our side, rare collectibles and art are indeed to be seen as alternative investment classes. The Wall Street Journal, in fact, reported that almost 8% of total wealth is held in so-called passion investments, art being foremost among them. In fact, of all luxury assets, the same report said art is the most likely to be acquired for its potential appreciation of value. Allow me to impress upon you then the startling reality of the appreciation of the value of Philippine art by taking a look at some concrete examples. I show you here a work by the distinguished modernist Justin Nuida, which sold in 2018 for the amount that you have on screen. Mind you, this was a turning point in the artist's career because it had a starting price of 100,000 pesos. But there was a battle royale on the auction floor and it resulted in this amount. In 3 years' time, for the same artist, the same size, and I can speak to you with this with certainty because we just recently sold this. For the same artist, this sold at 5 million pesos already, with the launch of the online catalog just on a Friday, and in 1 hour, all 12 works of the artist were sold and fully paid for in cash. So this just gives you an idea about the extraordinary movement of prices when it comes to art. I also speak of that from a more, of course, another standpoint. When I was working at the Ateneo Art Gallery, there was a painting by Fernando Sobel, which was, and I had all the records, it was acquired for 300 pesos in 1960 when the museum was established. Today, with my auction hat on, if I was asked to give the fair market value for that particular piece, easily 25 million in today's art market. As I mentioned earlier, more and more people are turning to art and collectibles to park their excess cash. People today talk about getting a real Luna or a Hidalgo instead of simply living in a 100 square meter condo bearing the same name. Think about it. Art is a finite resource, a certain kind, and I underscore certain, appreciates in value. It's movable, it's tradable, and concentrates a large amount of money in so little space. Your accountant can advise you on its tax effectivity, and it hardly has any maintenance cost, save for some cleaning and perhaps a reframing every 10 years or so. All this sounds terribly exciting, but it's important to not just get caught up in the art buying bandwagon without being discerning. Education, taking the time to do research, is the key to being a successful art collector and building your wealth through art. Doing so, you should be able to answer the following questions. So please bear this in mind for all of you who are beginning to look at how you can build your wealth through art. Ask yourself, what is the reputation of the artists? And there is that caveat: the more art costs, the more respected and established an artist should be. Anyone following the arts and culture news in 2018 would have been aware of this tremendous find that we had, which is now in the hands of one of the most significant art collections in the country. It's important to note here that recently the new wealthy, China, India, and Russia, have been buying back their heritage. Luna, in this case, and other 19th century Filipino artists command the highest respect, therefore the highest prices because we consider them here, and this is an exception for the Philippines, our artists are also national heroes. You don't have that a lot. In fact, I think we're the exception among other countries. Of course, we all know that we won, Luna won the 1884 Madrid Exposition. It's a point of pride, and it's a point of nationhood as well. And therefore, we ascribe so much value to Luna. In fact, the victory of Luna is the first real manifestation of the Filipinos being equal or better than people from other nations. Before Pacquiao, before Yuka Sasso, Pinoy pride is truly what is at play here in this study of the spoliarium. Whether spoken or written, what's most important to remember here in determining the interpretation of an artist are these attached to the former question that we had. Ask yourself, did you seek informed and expert opinion? What do you know about the artist's life and career? What is the artist's educational background and professional standing? This is by no means a hard and fast rule, but it stands to reason, for example, that an artist like Alquaz, whose accomplishments date back over 50 years, will be more collectible than an artist who's 25 years old and only having his second exhibition, simply because we know that this is a finite resource. He has the acclaim, and we don't know whether or not the 25-year-old artist is still going to be painting in 5 or 10 years' time. Another important thing to remember, and as I pointed out to you as well, is what is another question: what is the reputation of the person or institution selling the art? Very important to ask. In art, there is good news and there is also fake news. I love the fact as well that we're presenting this in line with a media company as well, because I think there's a lot to be discussed as well in terms of what is reported out there in terms of results. And you have all of these, prices being announced, etc. We do need to take all of these with a grain of salt. What is the reputation of the art of the person or institution selling the art is also very important. What exhibitions where these are held make the strongest cases about the importance of an artist. Discernment is very important here, as one needs to be able to distinguish importance between institutions. And of course, the expertise of its staff. Ask yourself the question, what's the background of the gallery director and those around him or her? I shudder when I think about former handbag dealers, rock band managers, shysters going around as self-styled art experts and their ilk, who after just stumbling into the lucrative nature of the trade, now revel in delight, fooling so many unsuspecting individuals. Remember, always bank on a good name, such as Lee Aguinaldo, with a background to boot, which leads to the next caveat. Who collects the artist's works? Private, public, or corporate connection being collected by these is another important factor that determines value. The more significant the collection that owns the artist's work, the more important the artist tends to be. When museums own the art, such as those by national artist H.R. Ocampo, this one again sold 2 Saturdays ago, we know that these are increasingly rare and difficult to find, and that's always a good sign. Major corporate collections are generally good for an artist to be in. Private collections only carry weight when the collectors are known and respected in the art community. There are many other factors to consider in understanding the value and investment potential of art, such as being able to discern if an artwork is truly important or knowing about its provenance and fair market price. The true value of a work of art should ideally, of course, like all investments, intangible, so-called illiquid assets, such as art, should be viewed over a long period of time. You should find enjoyment in it, and returns should not be the primary factor. Put simply, there are no shortcut answers to the question of how one can appreciate art. It takes great commitment to be able to stand in one's own truth, let alone to seek to move beyond it, to be able to see beauty, not only in terms of aesthetics, but also in terms of concepts and theories. I close by asking everyone what would be more enjoyable, looking at all of those banknotes, stocks, bonds, or looking at this up on your wall. So there's certainly wealth to be made, as I hope that I've very quickly presented to you in terms of the art market. But I do think that the true wealth that is made to be made here is a wealth of spirit, it's the wealth of joy that one is able to revel in when being surrounded by great works of art. Thank you very much.
Oh, thank you, Richie, for that little bit of a glimpse of a different investment stream that I think most people don't really think of or are aware of. I hope you stick around because we'd like to ask you some questions after our other speakers.
Thank you.
Our next speaker is an old friend of ours and I would say the rose among the thorns here, but I don't want to be mean to the guys. She is currently the CEO and the main force in putting up the Lobian Realty Group, a full-service real estate consultancy and property investment strategy firm, which is engaged in commercial and office space leasing, capital investments, optimization, and property acquisition and sales. She is also a strong advocate of women empowerment and currently chairs the Women in Business Committee of the European Chamber of Commerce in the Philippines, whose key activities provide an avenue for mentoring, networking, and other social activities geared toward uplifting women professionals in the Philippines. She is a tourism graduate of the University of Philippines and earned her Master of Business Management at also at UP. And she has studied at the Asian Institute of Management, the Management Executive Program of the National University of Singapore, and INSEAD Business School. Will you please welcome our good friend, Sheila Lobian. Good morning, Sheila.
Good morning, everyone. Good morning, Ben. And again, thank you, my Manila Times family. I'm a regular here. I'm always part of the yearly investment and economic forum, and always an honor and a pleasure to be part of the yearly event of the Manila Times. So before I start, let me just check if I can already share my screen, my slides right now. Can't see my presentation yet. Let me check first then before we start. Let me try again. There you are. Can you see it now, Ben? Good. All right.
Thank you.
So again, good morning, everyone, and I hope everyone's healthy and happy and safe wherever you are today. I was actually asked to, again, of course, talk about the property market, post-pandemic reset, and to discuss, how to grow wealth in the property market. Where can we place our money right now, or do we have to do it right now, given that we're still in the middle of the pandemic? And I'll try to answer that. I'll also do my best to give you an update on what's going on in the office, residential, warehouse, and the newest kid on the block, the real estate investment trust. And in the end, tell you why you should invest today. So I'll start with my first slide. So we're still in the middle of pandemic, obviously, and the whole world's affected. The global economy is up to today affected. This COVID-19 pandemic has shrunk the global economy easily by $4 trillion. And if you look at the ASEAN region, looking at the countries here, as you can see, the higher the number of COVID cases, infection, the higher also the contraction in the country's GDP. And here in Asia, ASEAN, the top 4 countries, they are all badly hit economically. So Malaysia, Philippines, Thailand, and Singapore. And the Philippines is always affected with what's going on in the economy, political, natural, and global financial risk. And as you can see, the last 2 crises that we've experienced, today COVID-19 is different. It's a combination of health and economic crisis, and the impact in our economy is severe. So last 2020, our GDP shrank by negative 9.6%. When was the last negative decline in GDP that we've seen was 22 years ago during the Asian financial crisis. And the most recent one, I already have experienced this. I was already in the property market during the global financial crisis, but our recovery was fast then. And the good news is today, World Bank, even ADB, and several other economic managers in our current administration, they're quite positive that this year we will grow by 4.1%. And next year will be even better. And the forecast is that our economy will grow by 5.5%. And that's good news for us in the property market. And the impact of COVID-19 in the economy is heavily felt. As you can see in this graph, the bulk of the economic activity, they're happening in the NCR and NCR Plus. So Metro Manila plus, when you go north, Central Luzon, and in the south, Calabarzon area. And since we've experienced the harshest lockdown in the whole world, the longest as well, this affected the whole economy. And when you put together NCR, Calabarzon, and Central Luzon, that easily comprises more than 50% of the Philippine GDP. And obviously, when there's no movement, the market also has, in a way, pause, stop. People are not, during those lockdown, limited movement means limited spending as well. And therefore, the economy has suffered. And with that, given that, which recovery template now for the Philippines? We've had, almost 38 million doses administered already here in the country. So the light at the end of the tunnel somehow is there. And the current administration, I think, has 70% of the population. They already have the vaccine in agreement. And it's just a matter of time that almost everyone, hopefully, will be able to attain the herd immunity. But looking at all the other crises that we've experienced, the current administration or the government in the past during the Asian financial crisis and even during the global financial crisis and today, one of the measures or actions that the government has done is to cut interest rates, to lower it down, to help the economy, of course, recover and move up. And aside from this, definitely we believe that this strategy will work for us this time around. And the Build project, the current administration is still heavily focusing on this. And we need this. Infrastructure spending is important for 3 reasons. Number one, of course, we want to provide jobs again in the economy. A lot of Filipinos need more jobs today. And productivity rate also went high. It's so high at the moment, and we need spending on infrastructure to prop up the economy. And also in the long term, this is very important for the Philippines to be more and more attractive so that we can attract more global players, international companies to come here in the Philippines and invest in the country. And as we all know, there are still so many things to be done. We need to have a better airports, railways, public transportation. Up to today, our internet connectivity is still a challenge for many Filipinos, even in high-end locations, and all the more in the in other locations. And our telco, all these things, they have to improve so that our attractiveness rating will be more and more important, and it will increase over time. And that's what we need. So these 2 things that the current government is doing, we should support, and we need this so that the economy will be able to recover, reset, and like what we've been always hearing, bounce back again. And as shared, it's not, all doom and gloom right now. We see silver linings. And when you look at these 4 economic indicators, our GDP from, 2020 versus 2021, we've already seen recovery by about 300 billion pesos. Employment rate is back at the 90s level. The OFW remittances is also recovering. And the Philippine Stock Exchange as well, it's somehow recovering. This shows that the private sectors are again confident that the market will recover and will bounce back. Now, us in the Lubian Realty Group, we look at this for real estate indicators, economic indicators for us. We monitor what's happening in the construction, GDP from construction. It's also moving up. Building permits now is moving up. Prior, the first lockdown, of course, we've seen a lot of construction has stopped, paused. But today, after almost 2 years in this pandemic, people know now what to do, and there is light at the end of the tunnel. So everything is improving. The low interest rate as well is pushing the residential loans and commercial loans. And these are all good news for us. And I always share that the real estate market is one of the actually most resilient investments that one can have in their investments portfolio. And you'll see that in this graph, the red line is actually the real estate growth year on year. And for more than 2 decades, the growth of the real estate market is actually higher compared to the growth in our country's GDP. And it tells you that the current, developers, people who are in the property market, they really have a high confidence in the real estate market. And that's why I always say that the Philippine real estate, especially the office market, is one of the best barometers of the Philippine economy. And especially when office spaces are built and taken, jobs are actually created in the market. So I would say the $1 million question for today's forum is, how do you grow wealth today? And our answer to that, and hopefully we can, give you this 3+1. That's our take. The 3 traditional investments in the property market are still the office market, back to office, back on track. A lot of companies are thinking of going back to the office next year. Many outsourcing companies are talking to us, looking at either, if they will downsize next year or decentralize or have a hybrid model. They are again looking at that. And the outsourcing industry is leading the way in the office market. And I'll tell you more about that. And then in the residential market, still, the housing requirement of the Philippines is underserved, and we realize that bigger is better, especially after experiencing the lockdown. You want to have a bigger place, a healthier home, and that's why there is growth in the residential market. And the brightest spot of the property market today is the warehouse, the logistics market. So click and portal and delivery is key. Everyone's buying things online. And last but not the least, this is the newest kid on the block and the next playground for everyone, the real estate investment trust. So these are the 3 investment options in the property market right now. And I'll expound more about this as we move forward. Now, let me talk to you about the Metro Manila office market. And as you can see, the rental rates, it's always affected with what's going on in the economy. And in the last crisis that we've seen, during the Asian financial crisis, it took us 10 years before we were able to recover. In the global financial crisis, it took us 6 years before we reached the pre-global financial crisis level in rental rates. And today, in the COVID-19 pandemic, last year, if you compare rental in 2020 versus 2021, there is already a decline. However, the rent is not that going down, which shows that, the office market is still holding on, and the rental rates, even though it has declined, it's not that significant. So from 1,190 across Metro Manila, it's down by around 1,100 pesos per square meter. In terms of vacancy rate, it's 14% right now. It's double digit compared to pre-pandemic, wherein we are only seeing 5% vacancy rate, meaning almost all the office spaces out there are fully leased. Today, it's ×3. And the main reason is that the Chinese gaming operators, many of them have left. And also because there are new supply that has entered the market. But then again, you can see that there is a steady supply new office spaces that has entered the market is around 700,000 square meters. Now, what's driving the demand? Pre-pandemic, the BPO and the online gaming, they were taking office spaces left and right. Today, it's the BPO industry, the outsourcing industry, and they are still growing despite what's going on around us. And that's good news for us in the property market. And the outsourcing industry is forecasting growth. As you can see, they're employing more than 1 million Filipinos in the IT BPM industry. And the global market also is expected to grow by another 4% in the next 3 years. And I think this is natural because as companies experience, pandemic, of course, they will cut on cost and they will outsource non-core work. And the Philippines is actually the number one when it comes to voice, and second when it comes to non-voice, the higher value work, engineering, architecture, etc. So we are positioned, we're actually well positioned to get more business coming from the US, Europe, and even here in Asia. And we have the talent, not to mention that we have a large population, very young, average age of 25 years old, and you can't get that anywhere else. Plus, this slide, actually, we have to give our, I would like to congratulate all our BPO players. The industry is actually very good in showing that they can still deliver despite what's going on. So from the first lockdown, the productivity rate was just at 50%, but today it's up, and they are proudly saying that their productivity capacity is up by 95%. So imagine this, they were able to deliver, and that's why companies are happy. And this will all the more encourage many to outsource in the country because our industry can deliver. We have the talent, we have the people, we have the leaders who can actually do what they are committed to do. Now, the POGO industry, I don't want to talk to you much about this, but we think that they will come back primarily because, the current administration now has finalized the tax that they will impose to this Chinese gaming operator. Though China mentioned that, they'd like to ban them from coming here, but the Philippines is just regulating them, which makes them, official now, really a business that can operate here in the country. And we think they'll come back because they like the Philippines, they like the environment here. And what's stopping them now is just this travel ban and this health issue. They can't come over freely because they're hiring mostly people from from the mainland China. So that's another option that can take all the available spaces that we have in the country. Now, the same story in the provincial office market. Townships locations, 60% of them are outside Metro Manila and about 40% are within the metro. So these are the mixed-use projects. You live, work, play in one area. The residential area is there, the hotel, the office, the school, the playground. So everything all in one area and within your reach. So the big boys, the big players in the property market are leading the way. They are developing projects all around the Philippines, from Baguio all the way to Davao. And this will grow more and more because the current thrust is to the balik probinsya and to move urbanization in the provinces and decongest Metro Manila. In terms of vacancy, it's higher compared to Metro Manila, 22%. There is a good supply of office spaces outside the metro. And what's good to note in this chart is that what's taken this year is actually higher compared to last year, 41% versus 19%. And in terms of rental, the rental have increased. So there is a demand for offices outside Metro Manila. And the take-up this year is actually high. So that's good news. That means companies are again being active and they're looking at the provincial area to somehow pandemic-proof their operation so that if another lockdown happens here in Manila, then they can still operate elsewhere in the provincial area. Now, in the residential market, this is also a pleasant surprise for us because we'll show you some data and they're showing that the take-up, there's an increase in take-up, and most of them are in the higher end range, the 7 million and up, primarily because many of us are now probably doing things at home. You work from home, you school from home, and a lot of people have realized that it's good to have a bigger place wherein you have a space for all the things that you need to do. And this is from the Bangko Sentral ng Pilipinas, the BSP Residential Real Estate Price Index. And what you'll note here is that the prices of single detached house, duplex townhouses, they have even increased. But of course, the condo market, the lower end have decreased. And this is natural because us also, we're busy with requirements of many of our clients. They're looking at house and lot right now. For those who can afford, of course, luxury condominiums or a beach house somewhere, because they can work anywhere, anyway today. And this is also an opportunity for many because when the market is soft, it's time to also scout and buy and scout for your, next home or next condo project development. And a lot of developers are actually giving a lot of incentives right now just for you to avail or for you to get your own condo at the moment. And again, this one, 2021 average residential prices versus 2020. And I was surprised as well when we made this research because you can see that there is an increase. So in the house segment, 4% versus 12 months ago. And in the condo market, 6% versus 12 months ago. So there is a demand for the residential market. The housing requirement of the Filipinos, it's still underserved. And then the warehouse, the storage, logistics market. This is one of the brightest spots of the real estate market at the moment. And it's growing heavily because of the growth in e-commerce. So it's a thriving industry with a growth forecast of 8%, 8.2% growth rate in the next few years. And it is expected to be a 1.1 trillion revenues, in terms of market in the next 3 years. And I think we can achieve that because pre-pandemic in 2017, we were already at the 600 billion market for the logistics market. And it's growing all the more because of the growth in e-commerce as shared. So this just showing you how profitable it is right now to be in the warehouse and storage solution. So as you can see, total revenue, cost, and return on revenue, the warehouse industry, the revenue per employee is 1.8 million. And the return on sales is actually double digits. So it's hard to find this kind of return today. And us in the brokerage business also, it's a good business because the transaction on rental alone grew 10 times from 2010 to 2017. And that's an average of around 1.5 billion annually. So it's a big market right now. And that's why many players are also entering, and the big developers are into this, the warehousing logistics market. And it's growing because of the phenomenal growth in e-commerce. People now can buy anything online. So look at that. From $500 million industry in 2015, the forecast is that the e-commerce will grow to about $12 billion in the next, less than 5 years, 2025. And that means the warehousing market will also grow because that's the key today. Almost all the big business owners, players now, they have an online presence. Even the big malls right now, they have strengthened their e-commerce, their online presence so that people can just buy things online and will be delivered at their doorsteps. And finally, the Real Estate Investment Trust, the newest kid on the block and the next playground for those who want to invest in the property market. So this is very new. It started last year and Ayala was the first one. It took the Philippines 10 years to fine-tune this. And as you can see, this investment vehicle is targeting 35% of the Filipinos, those who have 5,000 to half a million pesos in the bank. And it's very attractive, and because this will democratize the real estate investment in the country. And 90% of the REIT company, they are required to declare their income as dividends to the stakeholders. And if you look at some REITs in Asia Pacific, of course, Australia is quite big, and Japan, they have 60, in Japan, 62, 50 in Australia. And then when you look at Singapore, Malaysia, Hong Kong, less than that. Us now in the Philippines, there are 5 REIT companies, and so far doing well. Ayala just posted, last year, their net income is 1.23 billion, a REIT, and Double Dragon, Q2 of 2021, their income is 1.44 billion. So it's a very profitable business as well. And when you look at the other REITs that we currently have, from MegaWorld, Robinsons, Philinvest, etc., their initial public offering per share is, right now the stock price is higher compared to the initial one. And imagine that we are in this pandemic and the growth is already positive. So when the market recovers, then all the more, that this investment vehicle will be very successful. And we want to replicate what has happened in other first world countries, like in Hong Kong, Singapore, Japan, Australia. And we hope to have that here in the country as well. So there you go. That's our 3+1 real estate investment options on how to grow your wealth, after resetting, after all these things. The office market, as shared, will recover. Landlords are very patient. Tenants are now scouting for offices. It's the best time to actually negotiate with your landlord because they are flexible today. And the office market will always be a good investment option. That's why a lot of big players and big Filipino tycoons, Chinese, Filipino billionaires, business owners in the country, they have an office component in their business portfolio. The residential market as well will continue to move. As I've shown you, there is still an increase in prices. Land is finite, similar to what our previous speaker has mentioned. If art is finite, then land is definitely finite. You can't grow the Philippines. And that's why a lot of big developers are continuously land banking. And that's why many savvy investors would always have a real estate component also in their investment portfolio. And then the warehousing business, it will grow all the more today because of the growth in e-commerce. And that's why a lot of business owners are now heavily investing on this as well. And finally, the real estate investment trust will become an active alternative real estate investment for the savvy investors who are liquid today. And again, it's very attractive because of the land appreciation, the guaranteed dividends, plus the ability to liquidate quickly. You can't liquidate your house and lot that fast. So in the REIT is not like that. You can easily just liquidate. And with that, why invest now? For 3 reasons. These are the things that will make you think of investing now. It's the pandemic. And when there's a crisis, there are so many opportunities as well. The low interest rates right now, take advantage of that. If you have a good credit history, you're credit worthy, definitely you can get the best interest rates out there. Talk to Ed, talk to BDO, talk to BPI. I'm sure they'll give you a good interest rates, preferred terms. If you have the assets, you can mortgage your asset, take loans in the bank, and invest in another property or your business. So many things to be done there. Relatively low prices of property today. Many developers are actually giving incentives just for you to buy, to acquire. So take a look at that. It's the best time to hunt for bargains also. And definitely the real estate market will recover. So if you've seen the global financial crisis in 2008, those who have bought properties or land in BGC, for example, or in the South Alabang area, or anywhere else in the Philippines, for sure you are very happy today because your the appreciation of the land alone is so much here in BGC, easily by 8 times, in Alabang as well, and several parts of the metro. So take note of that. And today is actually, again, another opportunity to look at good options, because when the market recover, you can definitely flip your asset or, just develop it. And when the market recovers, for sure, you'll have a good cash flow. And again, before I end my presentation, I'd like to leave you with Warren Buffett's quote. Actually, he's up to today a well-respected investor, and he said that be fearful when others are greedy, and greedy only when others are fearful. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. And that's very applicable for the real estate investors, because it's a long-term play. And with that, I'll be very happy to answer questions later. You may follow us online, and we can help you with any of your real estate needs. This is us. This is the team. So back to you, Ben, and pleasant morning, everyone.
Well, thank you, Sheila, for always being a reliable resource person. We always welcome your thoughts and insights, and also for further instilling confidence in real estate as one of the most resilient investments, even with the great health and financial crisis going on. So please do stay with us until our fifth speaker is done, and we'll be fielding you a whole lot of questions also. We're very interested in the things you've mentioned, so thank you.
Thank you, everyone.
Now, our last but certainly not the least speaker is the president of BDO Securities Corporation and is the CEO of BDO Capital and Investment Corporation, the securities brokerage and investment bank, respectively, of BDO Unibank Incorporated. Now, he has 15 years experience in investment banking and the securities industry with focus on capital markets and corporate finance. He earned his Bachelor of Science degree in Management Engineering from the Ateneo de Manila University. So it's my honor to introduce Jose Eduardo Jed Quimpo II. Welcome, Jed.
Thanks, Dafort. Hi, good morning. Let me share my screen. Please let me know if you see it.
There.
All right. Hi, good morning. Hope you are all well and safe. It is a pleasure to be here. I am Jed of BDO Securities. We prepared several slides to give you guys a glimpse of the themes that we are seeing in the market during this pandemic, and hopefully these help you start or advance your investment journey. The key themes that we're seeing are namely, number one, the rise of the retail investor. Number two, that the IPOs that have gone well during the pandemic have actually done really well. Number three, the pockets of opportunities in the market. And number four, considering going beyond the stock market. So when the pandemic started in March 2020 and we entered our first lockdown, we went into a period of a lot of uncertainty. Investors consequently and rightfully went into cash and liquidity preservation mode. But after the initial lockdown, investors looking for their hard-earned money to get back to work started coming back into the markets. And we saw the rise of the retail investor. Not going into too much detail of these charts, but what the team prepared here is basically looking at publicly available data in terms of retail accounts in the Philippine Stock Exchange. So on the upper left, you have the accounts of retail in the stock exchange, reaching now 1.4 million. Then we've also charted out the online accounts, which as of end 2020 reached over 900,000. On the bottom charts, we're just illustrating here the retail volume of 2020 and 2021. So based on PSE data, there was an increase of 14% in retail accounts in 2020, and online accounts grew by over 19% over that same period. We at BDO Securities experienced a similar trend as we saw a marked increase in our online accounts and activity in our platform. The online investors got activated during the pandemic. As a result of the retail activation, PSE data showed that retail volume increased to over 48% in 2020. And this momentum continued up to the mid-year of 2021 as retail volume is up by over 129%. This despite ECQ Part 2 in April this year. The retail investor is now very much relevant in conversation of deals. In the old days, Deals and pricing were traditionally driven by feedback from institutional investors, with the retail investor seen as a price taker. Now, you have foreign and institutional investors looking to check the pulse of the Filipino investor. They monitor social media groups, various forums, and get feedback from local brokerages. The times and constraints being where they are, we saw an acceleration of digitization, just like what TG mentioned earlier. Online trading is the engagement of choice. The retail investors are now shaping the engagement platforms of banks and brokers. Today, there are over 30 brokers with online trading platforms. And trading platforms that are reliable, stable, and are easy to use have gained good ground. Key takeaway for the listeners out there is that if you want to look at the stock market, it is a good time for you to look at it because your voice is very much relevant to the banks and brokerages that will service you. And consider online as a platform of engagement. The next theme that we'd like to bring out is that we've had a look at the 2020-2021 initial public offerings, or the deals that have come out during the pandemic. And what we've seen is that these IPOs have done well. During this pandemic, we saw the initial public offerings of Converge and Mondinisen, which raised over 29 billion in the case of Converge and over 48 billion in the case of Mondinisen. Collectively, approximately 80 billion was raised during the pandemic out of these two IPOs, an outstanding amount considering the times. Both offerings saw the participation of foreign and local investors. Both have done well, with IPO price of Converge share price currently now at over 2 times its IPO price, and Mondinisen at over 30% since its IPO in middle 2021. These IPOs tested the depth of the Philippine markets and are proof that good deals done well will be well received. As an additional insight, the key success factors with these IPOs is that they have solid investment propositions and have exhibited that they can execute the strategy. And this has resounded well with investors. On the one hand, you had Converge, which in a recent disclosure, and I quote, continues to deliver industry-leading results for the first half of 2021, posting over 80% in revenue growth. And it goes on and continues to say, reaching over 1.3 million residential subscribers, 85% more than same period last year. Clearly resonating to the investing market. Then you have, on the other hand, Mondinisen, a household name that have products that all of us have at some point seen and purchased. In Mondi's case, it reported 2021 market share gains and strong export sales delivered revenue growth for the first half of 2021. Mondinisen reported that it achieved market share gains in noodles and biscuits in the Philippines, further reinforcing its market leadership. So the snippets and the disclosures are confirmations of what they've laid out when they came out and did their IPO, and the market has rewarded them for it. The other segment that has done well are the real estate investment trust. Another way to look at it, which Sheila presented, is that we've laid out the 5 REITs that we have seen in the market. We had the A-REIT in August 2020, the Pioneer, which raised 13 billion, which was followed then by the Double Dragon Properties REIT in March 2021. FLI had their REIT in August. Just a few weeks ago, Robinson's Land REIT finished their IPO. And tomorrow, we will have the listing of the Mega World REIT. These REITs have presented dividend yields in the area of 5.5% to 6.5% for investors, and have been seen as an alternative to the fixed income instruments which yield anywhere from 3 to 4%. The REITs are a hit with local investors. Investors get participation in the ownership of prime properties of the biggest developers in the country. The 5 REITs presented portfolios of various office properties in and out of Metro Manila. Of keen interest will be the growth story of the REITs. Part of the discussions during when these companies were being brought out to the public was the commitment of the sponsors in terms of asset infusion. These present potential upside to investors. You not only get the dividend yield, but potential price appreciation as well. Case in point being Ayala Land's A-REIT, which at today's share price is above 30% its IPO price. We expect the REITs with strong sponsors to continue to do well and will be a viable option for investors looking for yield. With the success of the IPOs despite the pandemic, we expect to see more IPOs in the coming months, including those that will come in smaller issue sizes. I personally like IPOs because it goes through a robust process of price discovery, which involves multiple banks, multiple investors, and the company itself. We know today that the likes of All Day Mart, Citicorp Power REIT, and Synergy Grid have filings with the regulators, and we should all keenly watch how those deals progress. The key takeaway is that IPOs have done well. Investors should continue to have a look at these IPOs, and the IPOs provide investors unprecedented access on information about the company through its filings, newspaper reports, research, and brokerage materials. Aside from the IPOs, there is still a lot of opportunities in the market. If you have a brokerage account, you will have access to research which can point you to pockets of opportunities in the market. In BDO Securities, our research team covers over 40 companies, and we regularly publish insights for clients to consider. Broadly speaking, and to add on to what Sheila mentioned, our research team sees growth for the Philippines in 2021 and 2022. There is a view that negative sentiment may have bottomed out. In the coming weeks, we expect investors to look keenly on the impact of the expanding vaccination coverage, with population protection targeted by the end of 2021. Like Sheila, we are also hopeful that infrastructure spending will boost activity and inflationary pressures and concerns will be muted. Hopefully, the Philippine economy will return to pre-pandemic sooner than later. Given this backdrop, our research team leads investors to have a look at certain sectors in the market. With the easing of lockdown measures and the gradual reopening of the economy, they believe that we can see renewed interest in quality cyclical names in the property, banking, and conglomerate sectors. These sectors are proxies for the post-pandemic recovery. They're asking investors to have a look at banks and property names for correction. In property, for example, the current price of several blue-chip property companies are trading at a substantial discount to net asset value. This is the sort of thing that we present to our clients in terms of research material. They present the discount to net asset value of several companies and compare it pre-pandemic levels, which could lead and point to particular values for investors. For yield-conscious investors, our research team also compiles statistics and options in the sectors of utilities, telecoms, this on top of the REITs, which I earlier mentioned. There is a wealth of information available to investors nowadays. You have the news, the websites of the companies, the PSE website, and the research material from banks and brokerages to make your choice more informed. The key takeaway here is that while the index has done well in recent weeks, there are still pockets of opportunities in the stock market. Equities are long-term investments, and research material will guide investors on how to look for value. The fourth theme is that investors we're seeing is going beyond the stock market. We are seeing retail investors or individual investors evolving. We see that they are now hungry for education, insights, and options. Current engagement is high in terms of product forums, corporate access, and webinars such as what we're having today. Investors are becoming well-informed and are actually being prepared and are ready to ask the hard question. The good thing is that we're also seeing our corporate clients being ready to respond and talk to them. For now, gone are the days of suits and ties and big investor briefings, investor forums in the big hotels. We see that through the online platform, investors and issuers are able to reach out and communicate more directly. We're seeing that they're also looking for access to other securities. Investments in stocks is part of a portfolio of investments of a typical securities investor. Fixed income, instruments, and money market funds are also in demand. As Ed mentioned earlier, we see the typical investor having a diverse portfolio of securities. For example, funds in money market for liquidity, bonds for regular income, and equity for growth. On the right side of this slide, and it's just basically a listing of the deals that have gone out in the market, what we're emphasizing is that on the corporate bond debt space, it has been very busy during this pandemic. In the second half of 2020, we saw at least one deal a month coming out into the market and offering choices of fixed income for retail investors. 2021, this has accelerated, And in fact, we're seeing longer tenors in terms of bond offerings. In 2020, we saw it in the area of 3 to 5 years. In 2021, we're now seeing tenors of 5, 7 to 10 years and bigger issue sizes of 10 to 20 billion as investors look for yield. The debt markets have remained open and continue to be open to the public. There is a good pipeline of corporate deals in the remaining months of 2021, with at least 9 more deals to choose from in the coming months. Aside from looking out for the IPOs of common shares of All Day Mart and the follow-on offering of Synergy Grid, investors can also look at the preferred shares of Jollibee and Citicorp Power REIT for yield plays. There are also high-quality names that are coming out into the market in the corporate bond market for those investors seeking for regular interest income. For more sophisticated investors, we see them going offshore. Your bank or your brokerage will be able to help you on this. There, they seek to capture themes like technology and healthcare, which aren't really available in the Philippines. Offshore investing also provides more options for participation in sustainable investing. Of course, offshore investing is more complex, since you will have to look into other risks involved with it, such as geopolitical issues and government concerns, such as what's happening in the US and China. Ultimately, sustainability, diversification, suitability, and active portfolio review is key. The investment journey is bespoke, very much personal, and should always be reviewed. In summary, we see the current environment as a good time to reset for the investor and suggest that you consider the following. Number 1, engage or re-engage your bank or your broker on your investment requirements. Consider establishing an online account. We have been open, are all open, and are ready to take your business. Number 2, keep a keen eye on the upcoming public offerings, not just equity deals, but also the fixed income deals. All of these types of securities have a purpose in your portfolio. And number 3, since you're here today as well, continue to take the time and take at home to take advantage of the research and learning platforms that have been made available to you. These will lead you to market opportunities that you can take. The path to return to normal will be uneven and might even take some more time. It has been and will continue to be a good time to reset your financial objectives and goals and to get back into the market. Thank you, and we hope you all stay safe.
All right, Jed, thank you very much for that interesting talk, and I hope that you'll be ready to answer a few questions coming at you like a rocket. For all 5 of our speakers, I'd like to thank everybody for their presentations. And now I think Dafort and I both have a few questions for all of you. Dafort, if you don't mind, I would like to jump in and I'll start the ball rolling. I have a question for Mr. Lerma. And this is something that popped into my mind as he was discussing the artwork and the value of art. What is your view of NFTs, which have become kind of a hot item over the past several months or year or so? Is that something that is worth it for people to get into? What do you think?
I think the key there is being able to get your head around it, first of all. And it's certainly not something that the art world has stumped their noses at, because the international auction houses had in fact started offering NFTs at auction, and there have been significant returns there as well. The interpretation of, or the understanding of what art is to begin with, is very fluid. And I think that the NFT and the venue in which that is presented as well, the art world is also beginning to present that as a proper venue for art. As far as the Philippines is concerned, for example, we simply respond to what the market is looking for. We have, in fact, fielded questions. We've actually released articles as well. Salcedo, I think, is in fact one of the first to start talking about NFTs. So I think that speaking about the local market, I think if you have more artists producing works in that particular platform, for example, expect Salcedo to start presenting them as well.
Okay, is it from your perspective as an auction house, is it something that we could encourage more artists to give them another avenue, and potentially give you more material and potential investors more to buy?
Well, if the artists again understand the technology behind it, etc., its key principles, I think that's most important. In terms of being able to channel their creativity, I think artists should be excited about that, because it's another medium, so to speak. So I would certainly encourage that. Perhaps more forums, in fact, where artists can be more exposed to NFTs as well, and how they can actually begin to produce works along that particular medium would be very helpful.
Okay, thank you for that. Dafort, you want to take a turn here, or
actually, as a follow-up to that, because your question regarding NFTs is more on the side of the producers, the artists themselves. But
yes,
how about in terms of, aside from NFTs, even traditional artwork, in terms of, because it was mentioned earlier, how we can all, it's better for people to get wealthy if everyone else around them is brought up along with it. So how can we democratize, aside from NFTs, the wealth access into the art investments?
If you're looking at, for example, what Salcedo Auctions is doing, 5-6 years ago, we opened a subsidiary called Gavilan Block, where we offer what we call, quote unquote, more affordable works of art. And these are not just smaller pieces by the masters, but also editions, for example, or drawings, works on paper, that sort of thing. It's a more affordable entry point for a lot of people that are wanting to enter the art market. And we can see from the demographics, you have younger people getting into it as well. And they have been able to enjoy tremendous growth from that. One thing that really sticks to my mind is I remember we were offering a giclée print produced by the family of national artist Vicente Manansala. That was 6 years ago, and they were selling. It was an edition of 25 at 25,000 pesos. Just very recently, it was offered at Salcedo Auctions, and that particular giclée sold for over 220,000 pesos already at auctions. So for those that came in at 25,000 5 or 6 years ago, that's a significant return already. So in terms of democratizing it, yes, we do have that particular venue whereby people would not necessarily need to look at the seven figures.
Yes.
My presentation really, so you're talking about a particular market there. But, we have some pieces that start at 500, 1,000 to up to 3,000 pesos. And over time, they've grown. In fact, to extend that idea, remember Justin Nuida, the artist that I was showing you that was selling in the millions already. When we were open Salcedo Auctions, I still remember the time that there were Nuidas that were selling between 50 to 100,000 pesos.
So you have young professionals who are looking at, maybe I'll invest in a car or start to buy my own condominium. If they have a house and have means of transportation, might want to refocus their money towards.
I would strongly consider it.
High return investments such as artwork, like you mentioned.
I mean, Sheila was mentioning, the growth, for example, in real estate. I think that goes hand in hand as well, because those walls need to be filled.
Yes, and especially since if you have people in the BPO sector, as mentioned in the charts and in the various stocks, remains resilient and actually has robust growth. So that means the people in those offices, in those outsourcing offices, are actually continuing to earn and perhaps even earning more.
That is correct.
There is capital that can be directed towards these affordable.
You can channel that, and in fact, the current crisis has in fact made it more clear to people, especially if they're staying indoors, that there are spaces that need to be filled. There are spaces that they need to look that if they are constantly looking at it, they need to be able to enjoy the spaces that they're in. And art is the one that gives you that. So in addition to the financial stability that art provides, as I always mention, there is that aspect as well of quality of life that it contributes to as well.
Oh, thank you, Richie, for letting us know about how much more people can access fine works
we have
of art.
one in October 16, and in fact, sorry for the plug, we have a gavel and block auction that's coming up, and the price points there are very attractive. Well, do look at that.
Something to look forward to. Maybe Ben can also field some more questions to our other panelists.
Yes, yeah. I'm gonna switch gears a little bit here. I have a question for Jed, and I think TG could also comment on this. You talked a little bit about the corporate bonds that have come out and that we're looking forward to. And one thing that radical tree hugger that I am, one keyword that I always listen for is green bonds, and I haven't heard that. Is there anything like that on the horizon? And if there is or isn't, is there a way to encourage more companies to go that route? Because I think those are starting to be looked at as really a valuable investment by a lot of people.
Well, let me take that first, and then I'll let Jed and maybe Ed, you can chime in, right? But then there's a lot. I mean, green bonds are typically one part of the class of known as sustainability bonds. Green bonds tend to be focused more on environmental concerns, where the use of the proceeds would be to protect or improve the environment. There are such things as care bonds for social uses. BPI has issued some care bonds. There are blue bonds for water preservation, Manila Water. So there are lots of bonds that have a sustainability bent. Unfortunately, I think domestically there's very few in pesos. They tend to be more focused on international issues because there's more of a demand from international investors on that side. But I think eventually that will come into this country, and more investors are looking at the sustainability, the ESG metrics of all issuers. So it will almost become de facto. Everyone will have to toe the line on sustainability issues. Ed, I don't know if you want to chime in. You have done a couple of those bonds.
Jed, you want to go ahead first?
Yeah. No, just to add, Ben, to what TG is saying, on the investor side, because I'm on the brokerage side, I think this is something that we're encouraging as well. There have been a few deals already. I think the banks are taking the lead in terms of the sustainability front. Both BDO and BPI have issued their versions of sustainability green bonds. Those are big thrusts of the banks, primarily because as you fund the banks, then they'll be able to fund the green and sustainable projects in the country. But we've seen property developers like Arthaland, power companies like EDC also going into this process of doing green. My mind is that the more we bring out these products into the market, the more investors will be conscious of the options. I remember in the very early days of corporate bonds, you always start with one guy doing 5 years, then it becomes 2 guys, and then everybody else is starting to do 5 years. The view here is that as we continue to bring this into the pipeline, and Ed is basically our source of the pipeline as an investment bank, as we bring this into the pipeline, we're happy to continue to encourage and bring this out to the market. Right now, we're not seeing it on a regular basis, but it is something that definitely we want to see on a more regular basis, providing green options. My last point, though, is that if you're into green, corporate bond market has an exchange, and the secondary market is there. So for people who are also seeking to include in their portfolio green or sustainable bonds, you can access that in the secondary market, and we'll be able to source that for you. The idea, though, is that we want to build a bigger pie here. And I think that largely comes from our sources on the investment banking side, which is from Ed's side.
Yeah, so I think just to add, Ben, I guess Working, my side is the origination side. So I will work with TG and court TG, let's say for AC Energy, for AC when his other hat to issue more bonds, right? And then what happens is the investment houses, BDO cap, PPI cap, the rest, working with foreign banks would be the ones to sell it to the market. So that's what happens, whether through the PSC or to the private market or abroad. And then what happens on the trading side, that's when the BDO securities, BPI securities, the other 130 brokers of the Philippines come in. So there's going to be a lot. It's not just that active yet in the Philippines because there's really no pricing advantage yet, but abroad we're seeing that. But despite that, we're doing it because it's good and it's imperative anyway. We focus on that. So thanks, Ben. I guess we'll see more of that. Green bonds, sustainable bonds, even sustainability-linked notes. Those are things we're playing around with, and we'll launch them soon.
Okay, thank you for that. Dafort, I think we have some questions from the audience. You want to take that?
Sure. Actually, there's a question back for art, particularly for art investment. There's a question regarding the time horizon. Say 1 to 2 years or more. Which artist should we look for upcoming? That's not too expensive and has exponential growth. So I think they're very specific. I think someone is holding on to their cash right now and they just want to, shut up and take my money.
Well, we've seen that. In fact, I mean, over the course of the pandemic, we've had more auctions now than we did pre-pandemic. In fact, that's a very interesting trend in terms of people being able to allocate their hard-earned money. And particularly with the wider range of people that are able to join because of the online auction component. So to answer the question, it's very difficult for me to mention particular artists' names because I wouldn't want to be seen to be endorsing anyone in particular.
Yes.
What I would suggest, though, is to be able to look at the artists that are offered in our sales. Now, in terms of, I think in terms of price appreciation, even in the short term, I would not simply confine myself to the younger artists, but even for the older ones, it's simply a matter of how much you can actually afford to invest. Because by and large, when it comes to the art market, I have yet to see in my 20 plus years in art, or even looking back beyond that, even when I was not involved in that and looking at the history of art, for example, there have not been any major drops in price of art. It just constantly grows. In fact, before I did a study on the works of Fernando Amorsolo, for example, that in spite of, for example, the financial crises, etc., the prices would stay within a particular level, even in the worst of times, or still increase, and they have increased exponentially as well. So for those that, as I mentioned, for those that whose liquidity is not as much, I would suggest to take a look at the Gavilan block auctions for to see the artists, not just the types, the names of the artists, as well as the types of works that are shown there. And for those that can afford to acquire more, take a look at the pieces offered in the Salcedo auction sales, much like what we did 2 weeks ago, where 90+% of the pieces were sold. And many of them multiplied in price as well from their initial estimates. Such is the excitement of people to be able to enter the art market. And I think there are other reasons for that as well, is be able to, the ease in which you can get into it, as well as the ease to be able to offload because of the venue that we provide. Thanks. I hope that answers the question.
Well, hopefully, Reynaldo Castillo, your answer wasn't specifically answered because of the aversion to
need to be yes.
But I think you were able to get more information than you expected. Actually, there was more value in the answer that was given. So thank you. I think Ben has a question for Sheila.
Yeah, I do. one of the we heard in a previous forum that the BPOs have been a bright spot, but as far as the other part, the 43% on the one chart that you showed, people going back to the office post pandemic, it seems to me that we might all be overestimating the impact of that a bit. Other than the BPOs, what do you think? What do you think the prospects for real recovery of in-office work are, and there might be some of the office market to end up getting repurposed for other things. People aren't going to be going to do the 9 to 5 commute anymore. I know I'm not. I think a lot of people aren't either. What do you think?
Well, regarding that, Ben, the outsourcing industry, as shared, they are expecting to grow, and they have different models now for the back to office. So today, obviously, they can do many of the work at home, but they still prefer, a lot of companies, they still prefer that their people are back in the office because there are sensitive jobs that and the companies of that also, they want the jobs to be done in the office in a more secure area. So we're not saying that it's going to be, when this pandemic is over, probably 100% back to work right away. There are many models now that the outsourcing industry and several other companies are looking at. And one of them is the hybrid model. Probably for you, you just want to go to the Manila Times office once a week or once a month. So there will be like that. And many are also looking at decentralizing their office so that, an office that's near the places of their employees will address the commute problem, because pre-pandemic, many of us are concerned is the traffic, right? It's not good for your physical and mental health. Today, people are scared because of the virus, and you want to avoid the commute, your exposure. And companies are addressing that by looking at providing multiple offices. Big companies are looking at decentralizing as shared, probably have a satellite office in Makati, in BGC, in Quezon City, near the homes of their employees. And then the next option would be to go outside Metro Manila to if they have a big operation already in Makati or in BGC or here in the Metro, they are looking now at the provincial area and in a way pandemic proofing the operation so that when another lockdown will happen and so they can't operate in Metro Manila, they can still do so in the provincial area. So those are the types of office scenario that they're considering at the moment. And the outsourcing industry is the biggest driver of demand, at least for the office market and several other multinational companies. Today, I don't know when we'll be able to go back to that 100% level until, of course, this issue, this health issue is addressed. I'm not confident that everyone will be also confident to go out and go back in the office, and companies are addressing that. But again, the residential segment is another story, and the warehousing business also is another story. But at least the good news for the office market, it's still there, it's still holding on. The land prices and the rental rates somehow stable, though case to case, some landlords are flexible and can give you a good term. So there are some companies also taking advantage of that, negotiating with their landlords and looking at their options for next year, if ever they will fully go back to work or bulk of them will go back to work. So they're looking at several options at the moment.
Okay, and I had one other question, and I know it's not really the number one thing that your company focuses on, but the retail industry. Prior to the pandemic, that was a boom here, and now it's obviously not. Do you think that is going to recover at all, or is that going to, really transform because of what we've been through over the last year and a half?
They will probably transform. Pre-pandemic, the Philippines is different from the US, Europe, wherein, The malls are shrinking. People are buying things online. Here in the Philippines, the mall, they're a destination. And obviously, SMBDO, they have that. Big malls all over, not just in the Philippines, but in several parts of Asia. And Filipinos, it's like a bonding moment for them, right? They go out every weekend. They go inside a mall because it's cooler there. It's cheaper. The air conditioning system is free instead of, having that at home. So that was the scenario before in the past, pre-pandemic. Today, because of what we're experiencing, a lot of people now are so used to buying things online, and you don't have to go out. Things can be delivered at your doorstep. So the retail market is heavily hit, with the hospitality industry as well, the hotel market. And these two sectors are repurposing many of their assets also. The retail market, some of them, they're trying to lessen or make their operations smaller and in multiple locations instead of having a big one in this area. They're also decentralizing this. There are some trends now, the pick up and go. You order online and then you just go there to pick up what you ordered. So they're looking for smaller spaces in the retail market. So in the mall market, in the mall area, some of them are offering their spaces as a warehouse right now because many of the logistics companies, this e-commerce, social, the platforms, they're growing and they're now offering their empty spaces as a storage place for the moment, temporary solution just to make money out of the vacant space that they have.
Okay.
So it'll take time.
Yeah, of course. We hope it won't take much longer. This is long enough. I think we're about down to the end of our time. Dafort, do you want to wrap things up for us?
Well, okay. I'm afraid since that's all the time we have for today's panel discussion, maybe we can ask last final remarks or insights from our speakers. And since Sheila was the last to talk, perhaps we can ask you to give your final words. Maybe you might want to talk about REITs or what else is whatever growth avenues that you'd like to recommend for people.
Since we're talking about growing wealth, right? And I'm in the property market. I always put my money where my mouth is. And the property market, as shared, is always one of the most resilient investments that one can have in their investment portfolio. And it's a given. That's why all the big developers, players, rich Filipino taipans, billionaires in the country, they have this real estate component in their assets, in their portfolio. And I have shared that. Look at the residential market. Many are anticipating recovery next year and taking advantage of all the available good deals out there. The warehousing industry, as shared, will grow. And that's why many big developers are talking to us, looking at where else they can do that, put that. The growth there is phenomenal as well. And finally, the Real Estate Investment Trust and our bankers here have shared a lot of information there as well. And I think that will democratize the real estate investment in the country. And we hope to actually see, the first world, they had a very successful real estate investment trust vehicle in their country. And we want that to happen here in the Philippines as well. So if you guys have any real estate concerns, we'll be happy to help you. So just contact us. Thank you again, my Manila Times family, for this invite to be with you.
Thank you, Sheila. How about our in-laws, TG and Ed? You mentioned, you brought it up about democratizing and making wealth generation more accessible, especially now when we're trying to reset our priorities, our lives. Maybe you can help channel the discussion or wrap it up and dovetail towards how the average person listening, paano ba ako makapasok dito? Parang it's all big. How can I help contribute growing wealth sa country?
Who for TG? Baka you want to start first. Go ahead.
Okay, let me start. And ako, my message before is really simple, right? I mean, everyone has the opportunity to grow their wealth if they plan carefully and study the investments. No investment is fail-safe, no matter what people say. I like what Richie said, right? If you make an investment, you either are prepared to lose it all or be prepared to own it for a long time. And I think that's one thing that people must be very aware of. Certainly, not everyone is as sophisticated as many of the players, but everyone has the opportunity to reach out to their financial advisor. You can reach financial advisors, asset advisors. There are many good people out there. Certainly, the institutions like BPI, BDO, Metro, we all offer that as well. And there's a myriad of investment alternatives out there. I think people should be aware of what their risks are. And what their status in life is. Because someone like myself, who's close to 60, I have a very different outlook and tolerance for risk than someone who's 25 and thinking about putting their first child through elementary school and looking to college. So there's a whole wide range of risk. But I think the future is challenging. There's a lot of liquidity that in economic theory, that means prices will go up. The pandemic has certainly broken a lot of new ground for new technologies, new business models, as Sheila has mentioned, right? So there's a lot of opportunity out there, and people should be bold, brave, and wise. And of course, the digitalization has democratized it, and the BSP is pushing very hard for financial inclusion, and I think we're in a good place today. Ed?
Thanks. Just to add to what TG said, because I totally agree with everything he said. So for the listeners, as the economy will recover, you will have spending money. Maybe the thing you have to think about is, of course, when we try to study the younger generation now, they want to invest in experience rather than hard assets. Versus during the older guys, to link myself, of course, Blanca is much younger, but we invested in hard assets. So maybe something to consider lang. Of course, revenge spending is important. Revenge for travel, right? And we anticipate that will help the tourism industry because our tourism industry travel got hit. But set aside something for the hard assets. And then when you set something for the hard assets, that's where TG's suggestion and my suggestions are. Take it to heart, at least study, but then they're good investments because later on, you buy a hard asset, and that includes also, of course, you should buy your first condo. And then once you have your condo, you should go now to Gabel and Salcedo and buy buy nice artwork that you think that you like. Me, kasi when I started, I just bought them. I didn't even know the prices, but because I liked them, and then suddenly there are multiples of value. But at least because you can look at them, as Tigi said, look at them for years. But then fortunately, sisikat rin and then to increase in value. So parang this whole seminar that Ben and Dafort created is really holistic. It's nice, diba? You'll have the shine, the sun is, there's a silver cloud. Of course, it's not all bad for the Philippines. It's improving. So as the sun rises again, there'll be investments. So spend wisely, but also invest wisely because there are many opportunities. So I guess to the Manila Times folks, thank you for having this esteemed speakers. Salamat.
Thanks, Ed. And Richie, since TG mentioned you, I think you're tagged.
Thank you very much, and just and while thanking you for this opportunity to be with this august company of speakers, I cannot emphasize enough: research. In fact, there's this little section that I decided not to read anymore in the interest of time, but given this opportunity, I'd like to read this to everybody. And for all of those who have been asking all of these questions, I'm sure there's more when it comes to art, because I think that, looking at bank, financial instruments, even real estate, there's a greater number of people that understand it more than those that are coming into art. And so I think it's also my responsibility to make sure that people don't make expensive mistakes. All right. So again, I'd like to say, be very careful when you read news about record-setting prices published here and there. Always ask yourself these questions. Again, what is the standing of the artist? Is there basis for the announced price? Are the prices announced, again, I underline this, comparable and consistent? If it's too high to be true, believe me, it is too high. Okay? There's a reason why a national artist's work can believably stay within a certain price range. Okay? No matter the passion of the collector, there's simply no way an individual who purports to have the financial resources to acquire art at a certain price will allow himself or herself to overpay. When you're talking about those amounts of money, anybody thinking right and knows the value of their money will not allow themselves to overpay. All right? So if it seems like it's overpayment, you better start thinking twice about that particular price range. In the art market, there's always a reason why a work of art is priced a certain way. Always. And contact me to try to understand why, but there's always a reason why it's priced that way. Remember, there is precedent and there is antecedent when it comes to art pricing. Simple research from a trusted source will show you the prudence of not relying on one-off, unfiltered results, but the importance of consistent performance over time, much like the stocks, the bonds, the real estate, the EIT companies, etc. It's really consistency. It's really reputation. It's really that ability to perform over time. Again, as a parting note, be careful, observe, do not be fooled. Remember, there are also many art Pied Pipers out there, and you should be able to discern those who you should be following. Thank you.
Thank you, Richie. Now, speaking of research, Jed, you did present a whole lot of information. Perhaps you could simplify for the average Filipino exactly how investment now is more inclusive. It's also more sustainable, and that way you can instill a bit more confidence in our fellow Filipinos to invest in the country, in themselves.
Yeah. Thanks, Dafort. So first is, I just want to first thank Manila Times for having us here. Second one is that you are exactly right. I think right now, because of what the banks have done, the likes of BDO, BPI, and our other co-league banks have done, we've really reached out and extended our arms. The Juan de la Cruz investor is really top of mind of all of us. And what we want to make sure is that we equip you with the proper tools and advice, and those we've made available to all of you. All the banks have been open throughout the pandemic. We continue to be open. We are in the office, so we're ready to receive you. We've built multiple channels to reach you, online, email, and we're ready to serve you guys. My last part here is that hopefully at the end of this forum, and since you're all already listening anyway, is your key takeaways is that investments is something that you should do, whether we are in a pandemic or outside of the pandemic. Number two, people are clearly here to help you. You've got people like Richie, Sheila on their asset classes, and you've got seasoned bankers like Ed and TG who have a whole lot of seasoned bankers as well ready to help. And then number three is just do it. I mean, ultimately, once you've learned it, once you've received the advice, I do encourage everybody to just take it and do it. Nothing gets you get going than the actual experience of actually investing. And thank you again, and hope everybody stays safe.
Thanks, Jed. How about you, Ben? Any final words and insights?
Well, there's been so much information from the professionals here that I hope everybody had a chance to listen to that and absorb it. I just have two thoughts from this. First of all, I think it's good that we have gotten to this point in the pandemic where we can start looking ahead to a little bit more of a normal life. And second of all, I think this has been very valuable because one thing we have learned is for each of us our own as individuals or as households, the value of sustainability and having a little resources and something to live on when, we're faced with an unexpected calamity. And one way to do that is to invest in something. And we have plenty of people here in different areas to help. And so I hope that our audience thinks about it and takes advantage of the expertise.
Thank you, Ben, and thanks also to our audience for joining us. Allow us to leave you all with this thought. there are even greater options for investors who have reset their minds. Now, it's time to reimagine economic systems that actually deal with global issues, because this is the way forward. It's not just about making more money, but making sure that we're able to continue to earn and continue with the things that really truly matter. So we deal with poverty, inequality, even climate change. But part of the new mindset is that not only do investments in green tech and industries make businesses and our environment better, but they're relatively sustainable and resilient in value. So in spite of pandemics and financial crises, even market crashes, these types of investments and this type of critical thinking is very helpful for us, for all, to be able to reset and start our new lives for the future. So I'm Dafort Villaseran and your co-host with Ben Kritz, and this has been the Manila Times online business forum, Grow Wealth with a Great Investment Reset. Have a great day.
Thank you, Ben. Thank you, Dafort.
Thank you very much.
Thank you, everyone.
Thank you, guys.
Thank you.
Love, I ordered cake.
Wow, thanks, love. Bilis ah. Teka lang kuya.
Love, bayad na.
Just debit with BDO.
Online shopping?
Just debit with BDO.
Love being free? get where you need to go. Get a BDO auto loan now. Love your new home? New life, new beginnings. Get a BDO home loan now.